Now let's discuss statement of cash flows. So what is a statement of cash flows? Statement of cash flows is a component of financial statements summarizing the operating, investing, and financing activities of an entity. This provides the relevant information about cash receipts and cash payments of an entity during a period. So similar to an income statement and statement of financial position, we can prepare the statement of cash flows in two formats. So this includes the direct method and indirect method. Under the direct method, we show in detail the itemized major classes of gross cash receipts and gross cash payments. So under the direct method, we will see the actual cash inflows and cash outflows from each cash transactions. However, under the indirect method, the net income or loss is adjusted for the effects of transactions of a non-cash in nature. Any deferrals and accruals of past or future operating cash receipts and payments, and items of income or expense associated with investing and financing activities. So compared to direct method, indirect method will not present to us the actual cash transactions, inflows and outflows from certain types of cash transactions. Next is the sections of the statement of cash flows. So, in the preparation of statement of cash flows, there are three sections. So the cash transactions must be classified as to the operating activities, investing activities, and financing activities. So what are the cash transactions that must be classified under the operating activities? So this includes cash flows that were derived primarily from the principal revenue producing activities of the entity. Another is the investing activities. So the cash transactions that will be presented under the investing activities include the cash flows from the acquisition and disposal of long-term assets and other investments that are not included in cash equivalent. For cash flows that are presented under the financing activities, this includes those that were derived from the equity capital and the borrowings of the entity. So in general, for an easier classification of transactions, cash inflows and outflows that are related to current assets and current liabilities are normally classified as an operating activity, while cash flow transactions that are related to non-current assets are normally classified under the investing activities, while cash flows that are related to non-current liabilities and equity are classified under the financing activity. So this is the general concept on the classification of cash flow transactions. Because our basis in the classification, whether operating, investing, and financing, is still the nature of the transaction. Because for example, if there is a bank loan of short term in maturity, though it is under the current liabilities, it will be classified under the financing activity because the nature of the bank loan is a financing activity regardless of the maturity. Now, let us compare the difference between the direct method and indirect method in each section of statement of cash flows. So if you can see, based on our slide, regardless of the method used, the investing activity and financing activity sections of the statement of cash flows are both presented under the direct method. So again, regardless of the method, investing and financing activities must be presented in direct method, which means the actual cash receipts and cash disbursements must be presented in the statement of cash flows related to the investing and financing activities. The indirect method is only relevant to the operating activities because under the direct method, the operating activities is presented under the direct method, while the indirect method is only applicable to the operating activity if the method used is the indirect method. So TikTok company reported the following comparative statement of financial position. So we have a statement of financial position as of December 31, 2020 and 2019. Then we have a statement of income for the year ended December 31, 2020. So our net income is 1,500 pesos. So in order for us to have an easier procedure in the preparation of the statement of cash flows, again, I will use the expanded accounting equation in the preparation of the statement of cash flows. This is not yet the actual statement of cash flows. This is just the method I use to facilitate the preparation of statement of cash flows. So based on the problem, we have a balance for the assets and liabilities and equity accounts in 2019 and in 2020. So the 2019 balance in the statement of financial position shall be the beginning balance for the year 2020, and the 2020 December 31 balances shall be the ending balances for the year 2020. So again, on the left side of the accounting equation are the assets. So the positive balances are in debit balance and the negative are in credit balances. Then on the right side are the liabilities, equities, and nominal accounts. So on this side, the positive are credit balances and the negatives are the debit balances. So first, in the preparation of the statement of cash flows, let us prepare the indirect method. So the indirect method starts with the net income, and the net income is being close to retained earnings. Based on our problem, the net income that is close to retained earnings is 1,500. So this is the amount transferred from the income summary account to retained earnings in our closing entry. After we determine the net income, now let us prepare the cash flow transactions under the investing and financing activities. Remember, regardless of the method, indirect method or direct method, cash flows that are classified under the investing and financing activities are always presented under the direct method, which means we need to determine the actual cash inflows and cash outflows in each transactions. In order to determine the actual cash outflows and cash inflows from investing and in financing transactions, we need to adjust the net income. So what are these adjustments to the net income of 1,500? So the adjustments would include all nominal accounts, which means accounts in the income statement that are related to investing and financing activities. And what are these? Based on our general concept, transactions that has an effect on non-current assets are investing activities. Then cash flow transactions that have an effect on non-current liabilities and equity are classified under the financing activities. Now, let's look for nominal accounts in the income statements that are related to non-current assets and non-current liabilities. So looking at our income statement, we have a gain on sale of equipment. So the gain on sale of equipment is related to a non-current asset, which is a PPE, of 180 pesos. Another is the depreciation expense of 780 pesos, which is also related to equipment. Aside from this, there is an interest expense of 120 pesos. So the 120 peso interest expense is related to financing, while the gain on sale of equipment and depreciation are related both to investing activities. However, for interest expense, we have two possible ways to present interest expense in the statement of cash flows. So here, interest paid, PAS7, paragraph 32, provides that interest paid is disclosed separately whether it has been recognized in profit or loss or capitalized. So, interest paid by default is presented under the operating activities. However, there is an alternative presentation for interest expense, and that is under the financing activities. So interest expense can be presented under the financing activity because interest expense is related to non-current liabilities or current liabilities that are financing in nature. For example, bonds payable. However, by default, interest expense is presented under the operating activities because interest payable is presented as current liabilities. Moreover, interest is being paid on a regular basis. That is why it could be presented as part of the operating activities. So since the default presentation for interest expense is under the operating activity, we will not include the 120 interest expense as part of the adjustment in order to determine the direct method cash flow presentation of the financing activity. So that is why we will only consider the gain on sale of equipment of 180 and depreciation of 780. So on our table, so let's include gain on sale of equipment for 180 pesos. Since gain on sale is an income, so this is credit balance. And the depreciation is at 780 pesos. And since this is an expense account, it is negative or debit balance. Now, since we are using the expanded accounting equation, the equation should always be balanced, the total of the left side and the right side. So since on the right side for depreciation, we have a debit to depreciation of 780, so the normal entry for depreciation includes a credit to accumulated depreciation. So that is why there must be a credit to accumulated depreciation also for 780 pesos. Now, for the gain on sale, to complete the entry, we need to determine the cash proceeds from the sale of equipment and the carrying amount of the equipment sold. So let us look in the problem whether there are information related to the sale of equipment. So based on the additional information, number 2, the sale of equipment includes an equipment that has a cost of 570 pesos and accumulated depreciation of 420 pesos. This means that the carrying amount of the equipment sold is 150 pesos. And since we have a gain of 180 pesos, the cash proceeds from the sale is 330 pesos, or carrying amount of 150 plus gain on sale of 180. So, on our table, since the cash proceeds is 330 pesos, so there must be a debit to cash for 330 pesos, then a credit to property, plant, and equipment for the cost of the equipment of 570 pesos, and a debit to accumulated depreciation for 420 pesos. So let's check if the left side and the right side have an equal balance. So 330 minus 570 plus 420 has a total balance of 180, while the right side has also a balance of 180 pesos. Again, the only nominal accounts that we must include in our adjustments to net income are the nominal accounts that are related only to investing and financing activity. So now, we're done with the nominal accounts adjusted to net income. Let's proceed to the computation of cash flows from investing and financing activity under the direct format. Since we are preparing the cash flow under the indirect method, regardless of the method, investing activities and financing activities are still presented under the direct approach, which means we need to determine the actual cash inflows and cash outflows that resulted from investing and financing activities. So to do this, we need to complete each column related to investing and financing. So let's start with investing. Investing is related to non-current asset. Our non-current asset is PPE. So for PPE, we have a beginning balance of 10,860 pesos. And there is a decrease of 570 pesos. That is the cost of equipment sold. Then our ending balance is 12,900. However, if we deduct 570 from 10,860, the total is 10,290. Our ending balance is 12,900. This means that the PPE account has an additional transaction that increased the PPE account. So how much is the increase? So the increase is 12,900 less 10,860 plus 570, 2,610. So what is the possible transaction that resulted to an increase in the PPE account? So the possible transaction would be a purchase of a new equipment. So let's check the problem if there is an additional information regarding the purchase of equipment. So based on the additional information number 5, we have a new equipment that is purchased during the year for cash. So since the problem did not specify the amount of purchase price of the equipment, but since we determined an increase of 2,610 in the PPE account, this means that the purchase price is 2,610. And of course, to record the PPE purchased is a debit to PPE and a credit to cash for 2,610. Now, let's proceed to the accumulated depreciation column. So negative 2,160, negative 780, and 420 has a total of negative 2,520. And this is already the ending balance of the accumulated depreciation, which means there are no additional transactions affecting the accumulated depreciation during the year. So we are now complete with regards to the cash flows from investing activities. So this includes the 330 cash proceeds from the sale of equipment, which is classified under the investing activity, and the negative 2,610, which is also an investing activity for the purchase of new equipment. Now let's proceed to financing activity. Let's start with the non-current liability, bonds payable. The ending balance is 1,800. We have no beginning balance on bonds payable, which means there is a transaction during the year that resulted to the increase in bonds payable. Let's look at the problem if there is an additional information. Based on additional information number 3, we have a 1,800 issuance of bonds payable for cash, which is at face value. This simply means that the 1,800 ending balance of the bonds payable is a result of an issuance for 1,800 cash. So the entry would be, of course, a debit to cash for 1,800 and a credit to bonds payable for 1,800. Now we're done with the non-current liability. Let's proceed to equity accounts, starting with share capital. The share capital has a beginning and ending balance of 9,150. This means that there is no transaction that affected the share capital account during the year. Now let's proceed to retained earnings. The retained earnings has a beginning balance of 2,280 and we have recorded a net income of 1,500. However, the total of these two is 3,780. The ending balance is 3,300. This means that there is a transaction that occurred during the year that resulted to the decrease. So how much is the decrease? So the decrease is 480. So what are the possible transactions that will result to the decrease of retained earnings? One possible transaction is, and the most common, is dividend payment. So let's check whether there is a dividend declared during the year. Based on additional information number 1, we have a cash dividends declared and paid during the year for 480 pesos. So the negative 480 decrease in retained earnings is actually a payment of dividend. So to record the payment of dividend, of course, the debit is retained earnings, 480, and the credit to cash also at 480. So this is negative. Now let's proceed to the last equity account, treasury share. The treasury share has no beginning balance. However, it has an ending balance of 420. So let's check the problem if there is an additional information about the treasury share. So based on the additional information, number 4, we have a purchase of treasury share for the amount of 420 peso cost. So this means that the ending balance of 420 is a result of a purchase transaction during the year. Of course, the entry to purchase a treasury share is a debit to treasury share for 420 pesos and the credit cash for 420 pesos. Now, we're done with the transactions under the financing activity. So the cash flows from financing activity includes the 1,800, which is a proceed from the bonds payable, the dividend payment of 480 pesos, and the purchase of treasury share for 420 pesos. So we have 3 transactions under the financing activities. Now, after we're done with the investing and financing activity, let's proceed to the operating activities. Since we are preparing the statement of cash flows under the indirect method, the cash flows from operating activities shall be presented under the indirect approach. So, still, we will complete the columns related to operating activities, and those are the current assets and current liabilities. However, in order to complete these columns, we will just account for the increases and decreases. But first, let us determine the net income before working capital changes. So the net income before the working capital changes is 1,500 adjusted by the nominal accounts that we have considered earlier that are related to investing and financing activities. So 1,500, then add back the depreciation, then less the gain on sale of equipment. So the 2,100 is the net income before working capital changes. Now, let's get the increases and decreases in the current assets and current liabilities account. Let's start with accounts receivable. Accounts receivable has an ending balance of 1,110 and a beginning balance of 630. So this means that the accounts receivable has an increase of 480 pesos. For inventory, there is an increase of 690, which is 3,270 minus 2,580. And for prepaid insurance, we have a decrease of 30 pesos. So we're done with the current asset. Let's proceed to current liabilities, starting with accounts payable. Accounts payable has an increase of 165. For salaries payable, there is an increase of 90 pesos. For income tax payable, there is an increase of 60 pesos. And for accrued interest payable, there is also an increase of 15 pesos. After this, let's check the equality of the accounting equation. So the total of this particular row on the right side is 165 plus 90 plus 60 plus 15 and plus 2,100 is 2,430. On the left side, we have a total of 1,140. So this is not balanced yet. This means that there must be an additional amount on the left side, which is on the cash and cash equivalent column. So on the cash and cash equivalent column, the amount that would be included should be the total of the right side less the increase and decreases in the other current asset accounts. So the total is 1,290 positive. So to check whether the accounting equation is balanced, let's again get the total. So the left side has a total of 2,430 as well as the right side 2,430. Another way to check is the cash and cash equivalent column should have an ending balance of 360. So after we consider the 1,290 with all other amounts, the ending balance is 360. So same with the ending balance. So now, let us prepare the statement of cash flows under the indirect method. So first, the first line item under the indirect method is the net income for 1,500. Next are the adjustments to net income. Remember that the adjustments to net income must be the nominal accounts that are only related to investing and financing activities. And in our problem, we have two nominal accounts. This includes the depreciation for 780, and this is added back to 1,500, and the gain on sale of equipment, which is deducted. So we have a 2,100 balance. This is the net income before working capital changes. Next is the changes in working capital, or the increases and decreases in working capital. Working capital refers to the difference between current assets and current liabilities. So let's start with accounts receivable. Accounts receivable has an increase of 480 pesos. However, the sign that we will consider in the preparation of cash flow must be the effect on the cash and cash equivalent. So what is the effect of the increase in accounts receivable on cash and cash equivalent? Always remember that the relationship of cash and cash equivalent account with other assets account is inverse, which means that there is an increase in accounts receivable, the effect on cash is decrease. Likewise, if there is a decrease in a particular asset account, the effect on the cash and cash equivalent is increase. So that is why for the accounts receivable, this is negative because the effect on cash and cash equivalent is decrease. Now let's proceed to inventory. Then since inventory has an increase of 690 pesos, the effect on cash is inverse. That is why negative 690. For prepaid insurance, it has a decrease of 30 pesos. Again, the relationship is inverse. That's why the effect on cash and cash equivalent is increase. However, for liabilities, the relationship with cash and cash equivalent is direct, which means an increase in a liability account is also an increase in cash. And a decrease in liability is also a decrease in cash. Let's start with accounts payable. So accounts payable has an increase of 165. That's why cash and cash equivalent is also increased by 165. Next is salaries payable, 90, increase. Income tax payable, increase of 60. And accrued interest payable, increase by 15 pesos. So, let's get the total of 2,100 and the effect of the changes in working capital. And this is 1,290 pesos. So if you remember, the 1,290 pesos is our balancing figure here on our accounting equation. And what is the 1,290 pesos. This is the cash inflows from operating activities. Now, we're done with the cash inflows from operating activities. Let's proceed to investing activities. First is acquisition of equipment for 2,610. Next is the proceeds from sale of equipment for 330 pesos. That is why we have a total of 2,280 negative, which is cash outflows from investing activities. Now, let's proceed to financing activity, starting with proceeds from issuance of bonds payable for 1.8. Next is dividend payments of 480 pesos. Next is purchase of treasury share for 420 pesos. And this will give us a cash inflow from financing activities of 900 pesos. So after we're done with the three sections of the statement of cash flows, let us add the total of the cash flows from operating, investing, and financing activity. So 1,290 less 2,280 plus 900 is equal to 90 negative. So this is the decrease in cash and cash equivalent during the year. Then deduct this from the beginning cash and cash equivalent balance of 450 pesos. Then the difference is 360 pesos. And this is the cash and cash equivalent ending balance. So this is how we prepare the statement of cash flow under the indirect method. Now, let's proceed to the preparation of cash flow statement under the direct method. Now, in preparing the statement of cash flows under the operating activities, this particular row, which is the increase and decrease in the current assets and current liabilities, shall be removed because this is only applicable to indirect method. So for the direct approach, the cash flows from operating activities must be presented in their actual amounts based on the cash transactions. So to do this, we need to include in our accounting equation all the remaining nominal accounts in the income statement that we have not yet included in our accounting equation. Looking at the revenues and expenses column, we only included two nominal accounts, the 780 and 180, which are both related to investing and financing. Now, let's include all remaining accounts because those accounts that remain in our income statement are all related to operating activities. So let's start with sales of 13,350, cost of goods sold for negative 7,200, salaries of 1,920, insurance of 300 pesos, rent for 1,050 pesos, bad debts for 60 pesos, interest expense for negative 120 pesos, and income tax expense of 600 pesos. So all these nominal accounts are all related to operating activities. So to check whether we already included all nominal accounts that are present in the income statement, let's get the total of this column. So starting from sales until gain on sale of equipment, the total is 1,500, which is our net income during the year. So this means that all nominal accounts were already in the accounting equation. Now, let's maintain the equality of the accounting equation. So let's start with the income tax expense account. So for the income tax expense account, we have a negative 600 on this side. So let's check if there is a related asset or liability account for the income tax expense. So the income tax expense is related to the income tax payable. So the income tax payable has an ending balance of 105 and a beginning balance of 45 pesos, which means that the income tax payable has an increase of 60 pesos. So to maintain the equality of the equation, the right side has a total of negative 540, which is the difference between 660 pesos. So the left side must have also a negative 540 pesos. And that is under the cash and cash equivalent column. So negative 540 pesos. And this is the cash paid for income tax. Now, let's proceed to interest expense. The interest expense is 120 and its related account is the accrued interest payable. The accrued interest payable has an increase of 15 pesos because there is no beginning balance. So on the right side, to maintain the equality, we have a total of negative 105 or the difference of 120 and 15. So to maintain the equality of the equation, the left side must also have a negative 105 balance. And that will be under the column of cash and cash equivalents. So the negative 105 pertains to the payment of interest. Now for the bad debts, the bad debt is 60 pesos and the related account is the accounts receivable, since this is a write-off. However, bad debts is a non-cash transaction, which means there is no related inflow or outflow when bad debt is recorded. So the 60 negative on the right side must have a corresponding negative 60 also on the left side. And that will be under the accounts receivable column. So for 60 pesos negative. So now both sides are equal. Now let's proceed to rent. The rent is 1,050 pesos. And looking at the balance sheet accounts, there is no account related to the rent expense. So which means that in order to have an equal balance of the equation, the left side also must have a 1,050 peso negative. And that will be under the cash column. So negative 1,050 pesos, which pertains to payment of rent. Now let's proceed to insurance. The related account for the insurance is the prepaid insurance. So the prepaid insurance has a decrease of 30 pesos. That is 240 less 270. So to again maintain the equality of the equation, so the right side has a total of negative 300. And the left side, we already have a 30 peso negative. So which means that there must be a negative 270 pesos under the cash and cash equivalent column. And this is the insurance paid during the year. So now let's proceed to salaries expense. The related account is the salaries payable. And salaries payable has an increase of 90 pesos. So to maintain the equality of the equation, the right side has a total of negative 1,830. So which means the left side should also have a negative 1,830 amount. And that will be under the cash and cash equivalent column, which will pertain to payment of salaries. Now, let's proceed to cost of goods sold. The related accounts for cost of goods sold includes inventory and accounts payable. Inventory, because inventory is the account for goods that were held for sale, while the accounts payable is used when there is a purchase of inventory that is on account. So for inventory, there is an increase of 690 pesos, while for the accounts payable, there is also an increase of 165 pesos. Again, let us maintain the equality of the equation. So the right side is negative 7,035 pesos. However, on the left side, we have a 690 pesos under the inventory account. So the difference will be under the cash and cash equivalent column for the difference between the total of the liabilities and equity and the inventory of 690. So which means that there must be a 7,725 negative under the cash and cash equivalent column. And this pertains to cash paid to suppliers for the purchase of merchandise. Let's check whether the equation is balanced on this particular row. So this left side has a balance of 7,035 pesos, and the right side has a balance also of 7,035 pesos. Then last is the sales account. For the sales account, the related account is the accounts receivable. So the accounts receivable has a beginning balance of 630 and an ending balance of 1,110. And we recorded a bad debt write-off of 60 pesos. So this means that 1,110 less 630, then add 60 pesos, there must be an increase of 540 pesos under the accounts receivable column. Again, we need to maintain the equality of the equation. So the right side has a total of 13,350, while on the left side, there should also be a total of 13,350. However, we already recorded 540 under the accounts receivable column, which means that under the cash and cash equivalent column, there must be a positive or increase in cash and cash equivalent of 12,810. So let's check whether all accounts will equal to their ending balances. So this is only for checking. So for cash column, the total of all transactions plus beginning balance is 360. For accounts receivable, the total is 1,110, as well as inventory, prepaid insurance, property, plant and equipment, accumulated depreciation, accounts payable, salaries payable, income tax payable, accrued interest payable, bonds payable, share capital, retained earnings, and treasury share. Now let's check whether the total balances will maintain an equal accounting equation. So the total assets is 15,360. Then the total liabilities and equity is also at 15,360. Now the accounting equation is complete. Let's prepare the statement of cash flow under the direct method. Now let's prepare the statement of cash flow under the direct method. So for operating activities, compared to the indirect approach, here we will present all the actual cash transactions that are related to the operating activities. So first is the collections from customers for 12,810. Next is the payment to suppliers for 7,725. Next is the salaries paid for 1,830 pesos. Next is the insurance paid for 270 pesos and rent paid for 1,050. Take note that these amounts were obtained from the cash and cash equivalent columns that we have prepared in our accounting equation. Then after this is the cash generated from operations for 1,935. So there are two remaining cash transactions that is under the operating activities that is not part of the cash generated from operations. And these are the interest paid for 105 pesos and income taxes paid for 540 pesos. So the total of 1,935 less 105 and less 540 pesos is 1,290 pesos. So this is the cash inflows from operating activities. Again, interest payment and income taxes paid are not part of the cash generated from operations, because when we say cash generated from operations, this mainly pertains to the principal business of the entity. Now, regardless of the approach, the cash inflows from operating activities must be the same. So under the indirect approach, the total of the cash inflows from operating activities is 1,290, while for The direct approach, the total is also at 1,290. The only difference is the presentation format. Now, let's proceed to the investing and financing activity. Again, regardless of the method used, the investing and financing activities are presented in direct approach, which means the actual cash transactions under the investing and financing activities must be presented, which means that this section of the indirect method shall be the same under the direct approach. So let's just copy and paste. So starting with acquisition of equipment for the investing activity, and this for the financing activity. So the cash inflows from financing is 900. Then the decrease is negative 90. Then the beginning and ending balance. Again, this section of the direct approach and this section of the indirect method must be the same, because regardless of the method, the investing and financing activity must be presented under the direct approach. However, for the operating activities, under the direct approach, we just compute for the cash inflows from operating activities using the increases and decreases in the working capital. While under the direct approach, the cash inflows from operating activities includes all the actual cash transactions of the company. So this is the preparation of statement of cash flows for both direct and indirect method.